Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. So, KG, as expected, the government did shut down this morning, 12:01 a.m. Eastern time, or 12 midnight in seconds, right? So I guess catch people up on where things stand and what the implications are.
Yeah, we are obviously seeing a stalemate when it comes to Congress and trying to pass a funding bill here. And we did see two bills actually getting shot down yesterday. If you kind of look at it, the Republicans or the GOP bill brought to the table was really trying to extend or have a CR to kind of extend funding at least through the month of October as they try to work out some of these issues. The Democratic bill wanted to try to extend the funding when it comes to the ACA, which is basically healthcare, which is going to be impacted by the end of this year and could actually impact around 20 million Americans, as well as some other measures here. So we have not seen any type of discussions that look like we might see a deal anytime soon, and we did see a shutdown. So we are going to still have essential services provided by the government. So things like defense will still be in place, but you may see some other functions actually shutting down, national parks closing, things of that nature here. So the market did see a little bit of a sell-off because of this news, but I think the big focus that you have to keep your eye out on is going to be the dollar as well as yields. They're going to really tell you how the market really feels about this shutdown. And right now, the market's really kind of pricing in the fact that maybe it will shut down for, let's say, a week or so, which we shouldn't have a major impact when it comes to GDP. But if we see something that's a little bit more extended, that's when it becomes a problem. That's when you could actually see GDP getting hit, unemployment rate kind of moving to the upside here. And that is where we kind of have, once again, going back to the Fed. What do they do in this type of situation? You are going to see around 750,000 federal workers furloughed at this point in time. And there's also another 150,000 that were expected to stop working just in general because of the Doge cuts this year as well. So that should also have an impact when it comes to the BLS data over the next couple of months. So right now, a little bit of a sell-off on the equity front. Yield's not really moving that much. Dollar's not really moving that much. I think you're just seeing kind of a rotation. And then we have a new quarter as well. So institutions are going to be rebalancing their portfolios into the remainder of this year. So a lot kind of going on here today. But the market's not too concerned at the moment.
It does seem that way because I just took a look at the 10-year yield, and that's, what are we off, like 2 basis points right now on the 10-year. So it looks like the idea is maybe this won't be so bad. I mean, but the last time we had a government shutdown, it was more extensive, right? The 2018 through 2019 shutdown, that was more than a month there. So that would obviously affect economic data. And we are already expecting not to get the jobs data on Friday, so that seems to me that the focus will be on today's ADP numbers, which will come out in about 10 minutes and change from now, right?
Yeah, exactly. The private data is going to definitely take center stage here over the next couple of weeks if we have this shutdown continue. So it's not only the labor data that we are going to receive on Friday, but it also can be the inflationary data as well. Now, the Fed does have a fair amount of tools. They have a lot of access to data. So when it comes to them being able to kind of craft policy, I wouldn't probably be too concerned at this point in time. ADP is a decent metric. On the inflationary front, we know that ISM services PMIs as well as manufacturing PMIs are actually a pretty decent leading indicator gauge when it comes to inflation. So they do have some areas where they can kind of backfill some of this data, but obviously it's not really ideal. You would like to see the government kind of get funded here, and maybe we do see additional actions taken by the administration. President Trump has, I would say, threatened the fact that he could actually make some permanent changes throughout this shutdown here to kind of make government a little bit smaller. It sounds like that could also lead to job losses, which would be kind of unfortunate here. So you are seeing a battle until we start seeing a softness in tone pretty much on both sides here. I think you got to hunker down and brace the fact that maybe we do have a shutdown. Now, you kind of brought up the last one. That was kind of an outlier in this whole shutdown type of sagas that we do see every once in a while. That was a very big outlier. Usually we see shutdowns for about 5 to 8 business days, not 30 to 35 days like we saw the last time around. Hopefully that's not going to be the case. And sometimes we actually do see equity markets thrive in that type of environment. So this might be a buy the dip opportunity. If we do see a little bit more of a drawdown, we have to be mindful of that. But we just don't have that much insights as to how the progress of these talks are kind of shaping up right now. We're still in the early phases of the shutdown, and the messaging from both sides right now is really towards their base in order to try to gain support through this particular event.
Okay, where we are seeing some major movement is in gold. Gold continuing to scale new heights. I mean, it's on its way to 4,000 right now. What's your take here, KG?
Yeah, you still see institutions kind of stepping in here on the futures market. And then yesterday was actually very interesting. And you guys can check this out this morning. Gold was actually in the negative yesterday morning. But as soon as the equity market opened up, you did see a pretty decent spike in gold. That just kind of reflects the fact that the GLD and some of the other gold ETFs, especially those that have exposure to the futures market or even the physical market here, are really pushing prices higher. And I think that's indicating the fact that obviously we still have some uncertainty. This has been a trending trade as well. So usually when we have markets like this or a stock or a commodity that's trading in this type of direction, people tend to pile in until something actually fundamentally changes. And right now, given the government shutdown type of dynamics here, could we see a prolonged shutdown that does kind of stress maybe some of the existing funding that we have in place for the federal government? That probably could lead to gold prices moving higher. And another thing that you could also see as well, if we do have some stress in the system, especially on the government front, is the Treasury actually trying to issue more debt securities in order to raise capital. Once again, we're not there yet. These are all possible scenarios in this type of environment, but gold continues to thrive to the upside. Silver doing the same, getting very close to that $50 level that has been a key area of resistance that we saw back in 2011.
Okay, and I want to get across one mover that you're watching, Nike, off the back of its results, moving higher in the pre-market. What were some of your takeaways here, KG?
Yeah, so you did actually see Nike beat both on the top and bottom line, and let's say that their guidance was a little bit better than the street's expectations. Revenue came in at $11.72 billion. Street was looking for around $11 billion. That's about a 1% increase on a year-over-year basis, which is something you really do want to see if you are a shareholder. And adjusted earnings per share came in at 49 cents. Street was looking for 27 cents. A lot of the growth came from North America. North America revenue came in at a 4% increase on a year-over-year basis. Still seeing some weakness when it comes to China sales. That was down 9% on a year-over-year basis, and you are seeing direct sales to stores as well as online actually contracting by 4% on a year-over-year basis. But once again, they had a kitchen sink type of quarter the last time around here. It seemed like they're getting incrementally better. The CEO is kind of talking about their vision moving forward, what they would like to do, really not focusing on one or two product areas, but having a diverse portfolio that they can kind of rely on in the sense that maybe fashion kind of trends change fairly quickly. We have seen that. I mean, Lululemon is seeing the same type of situation right now. So better than expected. You are seeing the shares trying to push higher here, and we'll see if the market's really willing to kind of get into this name, which is trading at a little bit of a discount when you're looking at their forward multiple compared to their peers on the street.
Okay, and KG, what are your targets on the S&P 500 today, and what are you looking for, especially when you think about sector trends, given how the last quarter was?
Yeah, to the upside for the S&P 500, 6675. To the downside, 6600. We break through 6600. That's when we have a little bit of a problem when it comes to the options positioning. That could create a little bit more of a flush. In an environment like this, you're looking for low beta defensive sectors to really outperform. So that's going to be utilities, consumer staples, which has kind of sold off here, saw a little bit of a bid yesterday, as well as healthcare, which has kind of a little bit more of a thematic trend that's kind of behind it, given the fact that we had that White House announcement from Pfizer yesterday. So those are the three sectors to kind of focus on as potential rotations for institutional traders.
All right. Thank you, KG. That's our Kevin Green, Senior Markets Correspondent. Appreciate it.